Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily review for Tuesday the 16th of November 2021. The time is just gone 4:15 in the morning GMT. Asian session coming to close, European session firing up, our lunchtime, North American session. Right, yesterday, Monday the 15th, then the first trading day of the week, we had a negative unopposed driver in the euro at minus 204, no backdoor flows, the opposing positive flows mainly going into the dollar plus 102, into the pound plus 79, and the yen was the positive rocket plus 23, activity plus or minus 204. Intra-week then, this is from Monday, yesterday's open to about 15 minutes ago. We've got a negative opposed driver in the euro at minus 166. Front and back door flows mainly going into the pound at plus 131, into the dollar at plus 72, and the yen is the negative rock at minus 37, activity plus or minus 203. So you can see you've got this easing of the euro. You've got full euro weakness yesterday on a daily basis, but over the week the euro is starting to show it's the opposed negative driver. Excuse me. We had the dollar getting the main benefit yesterday of euro weakness, but over the week the pound has been getting the main benefit as a secondary positive driver. Intraday then, which is the Asian session to about 15 minutes ago, we've got a negative opposed driver in the yen at minus 58. Front and back door flows mainly going into the pound at plus 42, into the euro at plus 38, and the dollar is the negative rock at minus 22, activity plus or minus 80. Right, so that's pretty much standard risk on structure. Yen driving on the negative, dollar weak, pound getting the bulk of it, and the euro following along behind on the positive. So anyway, we'll stop that there and write up the flows. Right, we've written up the flows then. So the euro is weak except against the dollar and the yen. The yen is weak across the board. The pound is weak except against the euro, the dollar and the yen, the majors. The Swiss is strong except against the AUD and the NZD. The CAD is strong except against the Swiss, the AUD and the NZD. The AUD is strong across the board. The NZD is strong except against the AUD, and the dollar is weak except against the yen. So what have we got? We've got AUD strength across the board, yen weakness across the board. We've got secondary strength in the NZD. So that's commodity currencies apart from the AUD, and we've got secondary weakness in the dollar, which is only slightly less weak than the yen. So what's going to knock it about, or has knocked it about when? So it's today's Tuesday the 16th then, so we've got GBP claimant count and unemployment count. So that's a sort of the GBP end of it. We've got GDP on the EUR as a block. We've got US retail sales and ECB Lagarde's President's speech much later on. On Wednesday we've got GBP CPI, Bank of Canada CPI, and Thursday the 18th is light. It's a bit of tier 2 data, so that boxes us in. So the most likely scenario then, so what we're looking at is tomorrow's inflation data, and today we've got US retail sales, which is likely to be significant in terms of trading. So we'll talk about that in a minute. So we'll stop that there and write up the asset classes. Right, we've written up the asset classes then. So US dollar index, basically it did a big break a while ago. It's broken. It's now at or near the highs. It's plus 0.26 above the resistance. So it's broken approximately 26% in model terms above the previous resistance. Gold, as we say, in theory it wouldn't like that strong dollar, but gold has been on the up off the back presumably of an inflation sort of hedge type trade, and the fact that we're swinging into the physical buying season for gold. Christmas, New Year, etc. So oil did a break and it's come off again. It's about 0.22 from the high, 22% off the high, having done about a 40% break from resistance. Wall Street, S&P, Tech, they've all got the same look. They did a sort of a significant break. They came off a bit and they're now at or near their highs. Roughly, Wall Street is 0.11 from the high, S&P 0.06, and the Tech 0.09 from the high. So Wall Street 11%, S&P 6%, and the Tech 9%. So they're roughly in lockstep. The S&P is arguably the strongest at the moment. Right, US 10-year in the bund. This is the price. Big pump down in price. So rising yields, and then we had this bounce in price. And the US is at 0.14 from the floor, so it's 14% above the model floor, so it hasn't bounced very much. It's well below half marks, whereas the bund is 0.40 from the high, so it's above half marks in price, so the yields are relatively weaker. So US yields are significantly stronger than European yields in that context. Right, copper chopping about, it's 0.46 from the high, so it's about half marks, but it's slightly above half marks. And US steel, again, has been yo-yoing. It's 0.36 from the high, so it's about a third off the modelled high. Right, so let's get rid of that and then do the final analysis. So basically we're looking at what's going on in the economic calendar through to about Wednesday or Thursday. Anyway, let's grab all this stuff. And so if we write up the majors then, so you've got dollar, euro, yen, pound, then we've got the CAD, the AUD, the NZD, and we've got the Swiss there. Right, so if you look at the flows, yesterday we had this this negativity in the euro. It was the unopposed negative driver, but over the week, and the euro's been negative over the week as well, driving. But it's starting to come off. It's easing. It's gone from the unopposed negative driver yesterday to the opposed driver over the week. And if you look at the Asian flows, it's actually positive now. It's the positive mover. So we've got this sort of like hockey stick effect on the euro there. Dollar index is sort of up near the high, and equities are sort of pumping above the high as well. So you're likely to get a negative yen transmission there. Right, and so if you look at the Asian flows, so this is the negative and this is the positive. You've got classic risk on here: yen, dollar, euro, pound. So and if you look at the economic calendar, you can see that today we've got GBP claimant counts, and you've got GDP on the EUR, but the significant thing is the US retail sales. Now the market is poised here. This is a risk-on scenario. Yen driving on the negative, dollar weak, and then you've got commodity currencies on the very positive on the up. AUD, NZD. That's like a big flashing light for risk on. So risk on is, so the market is just literally coiled, waiting to go full risk on. Equities are likely to pump higher. The yen's going to come off, and we're going to get a continuation, in theory, of this scenario. The pound has got plenty of elbow room to come up and soak up all these negative flows out of the yen and the dollar. And yesterday we thought the pound would, it started to think about it, but it was overwhelmed by euro weakness. Once you get the euro, and the euro started to bounce now, so really the driver's going to be probably, you've got this dollar strength now. If the dollar falls off a cliff after, say, strong retail sales, then you're likely to get a very negative dollar. So you want to be short the dollar and the yen, long the euro and the pound, and it's just a case of and long AUD, NZD in varying degrees if you're playing the whole board. And you'd have to wonder why the Swiss is so strong. well, the Swiss is probably strong, just as a sort of it may be just sort of looking at front running euro strength, or there may be some other reasons that we're unaware of. Anyway, that's a bit of a question mark there on the Swiss, but generally you want to be looking at shorting the yen, shorting the dollar, and long euro, long pound, and how you fit those together in FX pairs will be depend. So this data here, the what is it? Claimant count and the unemployment count. So that will set the scene on the pound. So if the pound, if this comes in nicely for the pound, then you could see the pound driving with euro, dollar weakness being the secondary driver, and therefore something like long, which we suggested, pound dollar should go up like crazy. So that would be something to look out for. Anyway, otherwise that basic scenario looks good to us. So hope that was useful. See you tomorrow for the daily briefing. Thanks for watching. Goodbye.